New data from Zillow is showing a massive warning for the housing market in 2026. This data from Zillow is showing that sellers are cutting prices now at a record rate. We literally have a record rate of price cuts. And not only that, data from Redfin and Realtor.com is also supporting this notion that sellers are finally starting to break on the US housing market and that this could signal cascading home price declines in many markets in 2026. This is data that you need to pay attention to as a home buyer investor because we are seeing the cracks grow wider and wider on the US housing market. And I'm going to get started here looking at an article from Zillow that came out a couple months ago. It was talking about why home values are rising in half the country, falling in the other half. But buried in this article, Zillow mentioned, everyone, take a look at this, that sellers cut prices on 27.4% of listings in July, a record high in Zillow's data set going back to 2018. So literally a record high number of price cuts. But not only that, everyone, Redfin just came out with an article a couple days ago reiterating the same thing. Home sellers are now cutting prices at a record rate to lure skittish buyers. And this graph, everyone, is amazing. It shows that the price cut rate on the housing market has now more than doubled from pre-pandemic norms, and that each additional month is seeing a higher and higher share of sellers cut the price. And that in certain markets, everyone, these price cuts are nearing 30% in areas like Austin, Texas. In areas like Denver, Colorado, the price cut rate's 31%. In Indianapolis, it's 31%. So we're seeing more and more markets get on the train of sellers doing big price reductions and doing more frequent price reductions. And there's a lot of people, everyone, who are trying to tell you that this housing market isn't crashing or isn't going down, yet the data keeps stacking up. It keeps piling up that this housing market is really teetering on the ledge of a massive decline. And this decline is already happening in many states, in many cities around the US. And in this video, I'm going to give you some of the states and cities with the highest price cut rate. But the first thing I want to do is actually break out this data for you guys more granularly so you can understand, what the price cut rate actually means. And what is this data that Zillow is actually reporting? Well, I'm going to show it to you right now, everyone, so you can have a handle on what's going on in this housing market. This graph is showing the historical price cut rate on the US housing market. And what you can see here in August 2025, the most recent data available, 26.5% of sellers cut the price. That's a record price cut rate for August. And it's actually the third highest in Zillow's data set. The only 2 months that had a higher price cut rate were September 2022, October 2022. And you can see here the long-term average price cut rate's 18.9%. So quite legitimately, we have a surge in sellers reducing the price. You can see this is the opposite of what happened during the pandemic. During the pandemic, when there was that big boom in demand, only 10% of sellers were reducing the price. Now, almost 3 times as many sellers are reducing the price. However, there's a funny thing about this price cut data that I got to explain to you all, and that it's not totally what you think, right? There's actually 2 types of ways that you can analyze this price cut data. And if you're a home buyer or investor or seller looking to get in the market over the next, let's say, 3 to 6 months, maybe the next year, you have to understand how this price cut data breaks down. Because what I've been reporting to you so far from Zillow and Redfin is the share of sellers on the market cutting the price. So according to Redfin, 17% of sellers cut the price in August 2025. Zillow has it at 27%. There's some differences in how they calculate it. So anywhere from 1/5 to 1/3 of sellers reducing the price. But a better question to ask is, how much are these price cuts? When these sellers cut the price, how much are they actually reducing the price? And I dug into that for you because I wanted to get an answer to this question. How much are the sellers actually reducing the price? Are they doing meaningful price cuts? And the data that I pulled on this was very interesting, everyone. I made another graph for you all here, where the orange line is the percentage of listings with a price cut, while the blue line is the median price cut on those listings. So while 26.5% of sellers cut the price in August 2025, the median price cut was only 2.8%. So when sellers are cutting the price, on average, each price cut is only 2.8%. And so what I think some of you might, suspect and feel when you go look at listings on Zillow is that a lot of sellers are cutting the price but maybe these price cuts aren't exactly meaningful. Like if you look at this house I found here in Tennessee, kind of in my backyard here in Tennessee, this is a perfect example of this. It's a 4-bed, 3-bath house, 2,200 square feet. It's a nice house in a good part of town. But the seller now has it on the market for $735,000. And you guys can let me know whether you think this house is worth $735,000. I mean, it's a nice looking house, but it's only 2,200 square feet. Looks like the kitchen might have been updated maybe in the last 15 years. I don't know. So it's about $338 a foot. So it's a more expensive price. But take a look here at the listings history. This house has been on the market for 4 months. So they listed it in June of 2025, 4 months ago. It then went contingent. It then went back on the market. It then went contingent. It then went back on the market. And then finally, the seller did a 2% price cut in late September. And I think this is a great example of just kind of what you're seeing with the price cut situation, right? Sellers have houses listed for 3 or 4 months, and then finally they cut the price 2%. And the reality is there's still a lot of sellers that don't totally know that we're in a housing market downturn. They get very confused actually when they list their house for sale and there's no offers, there's no one touring. It's actually like an emotional wake-up call to a lot of these sellers, and they're trying to kind of come to terms with it. So maybe they cut the price 2%, 3%, maybe they do another 2 or 3% price cut, and then what a lot of sellers are now doing, everyone, is they're delisting their homes. Some sellers are now delisting their homes. They cut the price, they don't get a buyer, and then they delist their home and they wait until the spring. However, these sellers who are waiting until the spring to list again, I think are kind of ignoring this warning from Zillow and Redfin. Because this warning is still a very relevant one. Even though a lot of sellers aren't doing big price cuts, the fact that we're seeing the highest share of sellers reducing the price in a decade is very meaningful. It is telling you that the housing market continues to weaken. More and more sellers on the margins are waking up to the reality that they can't get what they thought they could get for their house, and are at least making the decision to finally cut the price. And ultimately, housing downturns are slow, everyone. They take time to play out. And this is the frustrating thing about being a home buyer investor in this market. It's the fact that, yes, values are dropping in half the US. Yes, values are even crashing in certain markets, but it's happening way slower than a lot of people would like or that a lot of people would expect. And that's just how housing downturns go. It takes sellers a lot of time to get to reality, especially in the absence of like a full outright labor market recession. We have a recession on hiring right now, but we don't yet have a recession on firing and layoffs. So we're just not seeing the pressure for a lot of these sellers to do a 20% price cut off the bat. But rest assured, the more inventory that stacks up on the market, the higher that the incremental price cut rate goes, the more downward pressure there will be on prices. However, it really depends on your market in your area, everyone. Because if we go here to Reventure app, and we take a look at the price cut rate across different states, data available from Realtor.com on Reventure app, you could see these states in red have the highest share of sellers cutting the price. These states in red have the most price cuts. So actually, number one right now is surprising to me, everyone. Number one's Indiana. Indiana has the highest price cut rate, then Oregon, then Colorado, then interestingly, Massachusetts, Arizona, Tennessee, South Carolina, Utah, Ohio, and Maine. So these states here in red have price cut rates 30%, close to 30% or higher. Meanwhile, the lowest price cut rates are in areas like South Dakota, Nebraska, New York. If we zoom in here, New Jersey, Connecticut, Rhode Island, these areas have the lowest price cut rates that we could see in the US. And generally, there is a correlation, right? The more price cuts there are, the more downward pressure on prices. The fewer price cuts there are, the more upward pressure on prices. In New York in particular, this is a market that's still tight. Only 12.5% of sellers are cutting the price in New York right now. And so that's one of the reasons why values continue to go up. It's a similar story in New Jersey and Connecticut. Now, why are values in Tennessee starting to go down? Well, 29% of sellers are reducing the price. Why are values in Texas going down? 27% of sellers are reducing the price. So you can see in Texas, interestingly, there was a big surge in price cuts after the mortgage rate spike. It's since kind of come down to around 27%. So in Texas, a roughly average amount of sellers is now cutting the price. However, in Texas, there's now a lot of inventory on the market, 140,000 homes for sale in the state of Texas. So if you're a buyer investor trying to understand how this data is going to impact your housing market, you got to look at that price cut rate in conjunction with the inventory, in conjunction with the days on market. That's ultimately the combination to help you understand and unlock what's going on in your local housing market. And I'm going to take some requests from you guys here soon, but I'm actually going to kind of dig into some different zip codes in different areas so you can see, if you're a home buyer right now, like, should you buy a house? Should you not buy a house? Should you wait until the spring? Should you wait for values to go down by more? And here we're looking just at the Tampa St. Pete metro area. And here on Reventure App, we're going to go to price cut rate under market trends. Now, where are sellers cutting prices the most? It's in these areas in red. These areas in red have the biggest price cut rate. So if you're a buyer trying to triangulate where you would have the best chance of finding a discount, the best chance of finding a deal, it would be more aligned in these areas in red that have more active seller price cuts. Another thing you want to check is days on market. How much is the days on market going up year over year? That's another thing. Like if the days on market is going up 37% year over year in your area, that's a signal of a major slowdown. That's a signal that you're going to find more sellers cutting the price. You're going to find easier negotiating leverage. Sometimes folks, a seller might not cut the price, but they would be willing to actually take a lower price. They're just not going to say it out loud. So you can use this data to actually identify the areas where sellers are going to be more desperate. Of course, you also want to look at inventory too. How many homes are for sale in your zip code? If you see a big surge in supply like that, that's a signal of downward pressure. You could see in this zip code here in St. Petersburg, we have a minus 10% forecast over the next 12 months. And ultimately, what we do for you at Reventure App, everyone, is we put all this data together and we put it into a metric, our home price forecast score, which helps you all understand where the market's heading. In one simple number, our home price forecast takes the price cuts, takes the DOM, takes the inventory, and allows you to see it for your zip code and neighborhood so you can have a better negotiating leverage. You can get a deal. And if you're buying in an area where prices are going down 10%, you can use that home price forecast to actually assist yourself in negotiating and find a cheaper price and a cheaper transaction. But I think it's interesting how more and more we're just seeing these signals, right? Zillow, Redfin, Realtor.com, these are the biggest data aggregators on the US housing market, right? And they're coming out with articles saying highest price cut rate on record. Redfin saying highest price cut rate since 2012. Zillow saying highest price cut rate since 2018. This isn't a secret anymore, right? That the housing market is slowing, that the housing market is going down. And this is great news if you're a buyer investor. If you've been waiting, we are seeing all the signs, right? That things are going to continue to tilt in your favor. The thing is, a lot of people don't want to admit it, right? A lot of people are still clutching to the idea that somehow this housing market is going to miraculously just save itself without becoming more affordable. I'm of the mindset we're going to need to see that affordability come in before the buyers come in. And you can see actually that the buyer demand is really low, everyone. I mean, in terms of just buyers, right? Existing home sales on the US housing market. You can see here 4 million existing home sales in August 2025. The long-term average prior to the pandemic was 5.4 million home sales. So this is just how low the demand is today to buy. And if you're a realtor, no doubt you understand this. If you're a mortgage broker, no doubt you understand this. A lot of people still don't understand this though, right? That the demand is this low. And, this is basically a similar level of demand to what we saw in 2008, 2009, after that last crash. That's how low the demand is right now in terms of existing home sales. And, so long as this demand stays in this range, we're not going to see an immediate recovery in the housing market. We're not going to see an immediate bounce back. You guys can let me know what you think. Do you think the demand's going to come back in 2026? What would have to happen to cause this demand to come back? And why aren't we seeing kind of a bigger decline in prices nationally, right? So I think this is the other surprising thing I just want to kind of walk you guys through is that we have a record price cut rate, we have record low demand. So you would think with a record price cut rate and record low demand, like why haven't values just collapsed already, right? And why hasn't there been a 2008 style crash already? And one answer is that we haven't seen the firing labor market recession yet. We haven't seen the unemployment rate go up significantly. It's 4.2%. To see real pain, real distress in the market, lots of people doing 20% price cuts, the recession in terms of unemployment is going to have to happen. But another reason is actually the composition of home buyers. And this is a really interesting point, is that ask yourself the question of those 4 million existing home sales, who's buying those homes of the 4 million existing home sales? Who's actually, transacting in this market? And when you dig into the data on that, you find some interesting things. Like there's actually been a massive shift in the composition of home buyers in this market right now. And the main thing we're seeing is that the median age of home buyers is surging. So this is an article from Apollo earlier this year. Median age of home buyers, 56 years old. 56 years old for the median age of home buyers. And you can see here, this median age of home buyers has skyrocketed over the last 4 or 5 decades. I mean, back in the 80s, median age of a home buyer was 34. Now the median age of a home buyer is 56. So the median age of a home buyer has climbed by about 22 years over the last 4 decades, but it's really climbed in the last 5 years. Prior to the pandemic, the median age of a home buyer was 46. Now it's 56. So home buyers have become 10 years older in the last 5 years. And you should ask the question, is that reflective of an actual demographic shift? Like, has the population become 10 years older the last 5 years? No, it's gotten a little older. But the real explanation here is that the people who are still buying homes are people who have means, right? The people who are still buying homes are older, more baby boomer generation, probably with more stock market wealth, probably closer to being millionaires. Like I would bet you more of the home buyers today are millionaires than any other period in US history. And what I actually think this is doing, everyone, is I think that this is biasing the home sale transactions and the average sale prices to some degree. Because if we look at data from the National Association of Realtors, we can see that the NAR is reporting that the sale price of existing homes in the US has gone up 2% in the last year. So, the NAR is still showing a 2% growth in sales price, 6% in the Northeast, 5% in the Midwest, basically flat in the South and West. But ask yourself the question, well, if the composition of buyers is much smaller and is much more tilted to a wealthier contingent, is this even reflective of a normalized distribution of like home buyers in the US? And what's going to happen when home prices and mortgage rates eventually do go down enough to bring these buyers back in? You could see here that the percentage of the growth in home sales, right, over the last year, in the million plus price range, there's been 8.2% growth in home sales in the million plus price range, 7.5% growth in home sales in the 750,000 to 1 million plus price range. Meanwhile, 250 to 500,000, no growth in sales, 100,000 to 250,000 minus 1.2%, and then 0 to 100,000, I don't even know what's transacting for that, minus 10%. So more of the home buyer composition in this market is shifting to this upper tier luxury buyer, baby boomer buyer who probably has a stock market portfolio, probably isn't feeling this recession in the same way that Gen Z and millennials are. And so what this suggests to me is that the average sale price in the US being 2% higher than a year ago, I don't actually think that's a totally legitimate number if you're talking about like an apples to apples comparison on homes and an apples to apples comparison on buyers. And what I suspect is going to happen is when home prices drop enough and mortgage rates drop enough, you're actually going to see the average sales price go down. You're actually going to see it go down. You might even see it plummet simply due to the fact that the buyer pool is going to normalize into a more normalized buyer pool that isn't as weighted towards 56 plus year old baby boomer buyers. So again, median home buyer age today is 56. Think about what that means for the type of transactions that are happening and what will happen in the housing market when that median home buyer age goes back down once the market becomes more affordable. I think it's going to shock a lot of people when that happens. You're going to see the median sale prices, the average sale prices go down by a lot just due to a change in the mix of buyers on the market. And again, folks, all this data is warning us of this. This isn't really speculative anymore. Zillow, Redfin, highest price cut rate on record, right? That's what they're reporting. That's what like the biggest housing market companies and data collectors are reporting today. Highest price cut rate on record. And so, rest assured as a buyer, that's good news for you. It means that sellers are starting to come around. It means that sellers, even if they're only cutting 2.8% at first, right? They're at least starting to cut. And the more and more sellers that cut, the more downward pressure there's going to be on the market. But I dug into this data even in more detail, everyone, on the composition of percentage of sellers cutting the price versus how much they're cutting the price. And I broke this down for you all actually by city. So I said to myself, well, how does this vary by city? What are the cities where the price cuts are biggest versus cities where more sellers are cutting the price? And this was also very interesting. This was very interesting data that I think informs you guys on actually what's going on in the market. So on the bottom right of this graph, we have markets with the most price cuts on the bottom right of this graph in terms of the highest listings, most listings with a price cut, percentage of listings with a price cut. On the top left, we have the markets with the fewest price cuts. So like Rochester, New York has the fewest price cuts. Only 13.6% of sellers cut the price. But in Rochester, the median price cut percentage is 4.7%. So of the 13.6% of sellers that are cutting in Rochester, they're cutting on average 4.7%. So it seems as if the fewer price cuts there are in a market, the bigger the price cuts are per seller. Whereas if you go back to the bottom right, the more sellers that do price cuts, the lower the price cuts are in terms of how big they are. So in Phoenix, 33.6% of sellers cut the price in August, but the median price cut was only 1.7%. And I was thinking about this data and kind of like what it means about these different markets, right? Like these markets that have like 1/3 of sellers cutting the price, but they're only cutting 2% on average versus Rochester and Syracuse, right? Fewer price cuts, but the price cuts are bigger. And I was thinking about it, and what I ended up getting to, everyone, was that in every market, there's probably always some segment of more distressed sellers that need to sell, right? Like divorces, deaths, moving for a job. Like there's just some segment of those in every single market, right? And then there's also some segment of people selling who don't totally need to sell. And in a market like Rochester, where there's very little inventory and few sellers cutting the price, the sellers that are cutting the price are those handful of sellers that are basically in a distressed situation. Whereas in Phoenix, you have that baseline of sellers who are in a distressed situation, but then you have all these other sellers piled on top who maybe aren't in a distressed situation yet, and who are just like more willing to just cut the price 1 or 2% and then pull their home off the market. And so I think that's helping describe kind of the difference here between these markets that have a lot of listings with a price cut versus not many listings with a price cut. But I was actually digging through some data, everyone, in actually Rochester. Now, Rochester, New York, this is actually one of the hottest housing markets in the US right now. Values are still going up here. Very few price cuts in Rochester, right? And why is that? Well, if you can actually look at some of these houses in Rochester, everyone, they're actually still really affordable. You could buy a four bed, two bath house in Rochester, 1,500 square feet. You could buy it for $249,000. That's still a fairly affordable price. I mean, it looks pretty livable too. It's kind of a classic older house. Kitchen probably needs some work at some point, but 250 grand to buy this house in Rochester, $1,600 a month payment. So the prices here in Rochester are just much cheaper. And thank you for your subscription, Ben. Ben actually just subscribed here from Taiwan. So let's welcome Ben to being a channel member. Thank you for that. Leave a request, Ben, if you have one. You can see it's just a more affordable price. And so there's more resilient buyer demand in a market like this. House went on the market a day ago, and one day has 68 saves, 900 views. Wouldn't be surprised if this house sold quickly. Let's do a little analysis with Reventure app data. Zip code is 14609. 14609. So let's type that in, 14609. And we can see actually the 1-year price forecast in 14609 in Rochester is plus 5.9%. Plus 5.9%. So we actually believe on Reventure app that this is still a seller's market. This is what the data is telling us. This is still a seller's market where prices are forecast to go up. So, we think that this house, if you're looking at buying a house like this in a zip code that's forecast to go up 5.9%, it says, you wouldn't really gain much by waiting, right? In a market like this, you wouldn't gain much by lowballing. This house is probably gonna have a lot of offers. It's a competitive market. Values are forecast to continue to go up here in much of Rochester, New York. But if we were to switch the view to say Phoenix, right? Remember, folks, Phoenix was the market that had a lot of price cuts, 33% price cut rate. Phoenix has more than 2 times more price cuts than Rochester. So let's now look at Phoenix and look at a listing in Phoenix and do a compare and contrast and see how it looks. So let's just pick a random one. Here in Phoenix, we have a 5-bed, 2-bath on the market for $445. So you can already just see the difference in price, right? In Phoenix, you're paying $445 for a 5-bed, 2-bath. In Rochester, you're paying $249. Granted, the house sizes are different, but you have this house in Phoenix. It's actually $179 a foot. This actually isn't a bad price per square foot. It's been on the market for 100 days. 86 saves in 100 days. Way fewer saves, way fewer interest. This is actually a great example of what we're seeing. So this house was listed on the market, wow, all the way back in 2022. So someone bought this house in Glendale, Arizona for $410,000 in April 2022. Then they relisted it for 33% higher. I don't know if they did a flip or not in July 2022. And they've been trying to sell this house for the last 3 years. And it's just been cutting the price, and they increased it, cut the price again, took it off the market, put it back on the market, cut the price. And so they've cut the price now about $100,000 over 3 years. You got to ask the question, they've cut the price over $100,000 in 3 years. Is that finally enough to sell this house? And where is this market going in the future? Well, let's look at the zip code 85302. Let's type that into Reventure app. And folks, this is ultimately how you guys should conduct this analysis as home buyers and investors. Look at the listings on Zillow, take the zip code into Reventure app, and take a look at what's going on. So 85302, completely different situation than what we observed in Rochester. The 12-month price forecast here, everyone, is minus 8.1%. So this is like a completely different world, a completely different housing market on this house in Glendale compared to this house in Rochester. On this house in Rochester, you're probably going to have to compete with multiple offers. You're probably going to have to deal with multiple offers, maybe offering over ask. But if you're going to be looking at this house in Glendale, which, by the way, everyone, it does look like they did a flip. I mean, this actually looks pretty nice. This house, you can see it's still got the bubble wrap here on the dishwasher in the oven. This actually looks pretty nice. $179 a foot for a flipped house in Phoenix. Why is this sitting on the market so long? Well, let's go to the zip code data. In terms of inventory, this zip code has the most inventory that we have seen in the last 10 years, according to data from Realtor.com available on Reventure app. So that inventory is leading to that listing just sitting on the market, right? In terms of price cut rate, you can see the price cut rate, it had this kind of fluke in 2022, but it's 40%. 40% of sellers are cutting the price in this zip code. So we have 2/5 of sellers cutting the price, tons of inventory. Now what about the DOM? Oh my gosh, DOM, 61 days compared to a long-term average of 30 days. So 40% price cut rate, record inventory, record DOM in this zip code here in Glendale, Arizona is translating to this house sitting on the market. They've cut the price 100 grand. It's been on the market 100 days in the most recent iteration. I would say, folks, like sellers like this. I'm not going to say this seller in particular is probably willing to take less. Maybe they will be. But if you're in a zip code like this, where all that data is lining up and the 12-month price forecast is minus 8.1%, it says that you can get, really aggressive on your negotiating strategy in terms of offering below ask. Right? I would really heavily offer below asking price if you're in one of these zip codes with a minus 8.1% price cut rate. And I just think it's wonderful to actually compare Rochester and Phoenix, two completely different markets in terms of price cut rate and inventory, and we're seeing it on these listings that we just looked at. Now let's take some requests from you guys out here in this live stream. It's channel members only in this live stream. Benjamin, thank you for joining. We just got a comment from Ryan. Now, Ryan is about to move to Durant, Oklahoma, looking to buy. Couple houses sitting on the market for 100 days. Was thinking 10% under listing should be good offer. What's your thoughts? Rent for 6 months or buy? Thank you for the super chat, Ryan. Let's take a look at this zip code 74730. Oklahoma is an interesting market. Oklahoma's an interesting market, 74730. I actually like Oklahoma. Some of you might know that I'm a big fan of Oklahoma City, 74730. Let's see here. Let's see here. 74730. I wonder, do we have the data for this area? We should have the data for this area. 74730. Here we go. 74730. So, Ryan, this is an area that we think is going to drop. So Durant and Calera, Oklahoma, just for everyone, this is kind of border with Texas here in Oklahoma, southern Oklahoma. Values are forecast to drop 7% to minus 6% over the next 12 months. Minus 6 to minus 7% over the next 12 months in these zip codes here in southern Oklahoma. So that says, Ryan, that you should be aggressive on your offer. I mean, you're talking about offering 10% below list. I think that the data supports you on that, right? The reventure forecast is showing minus 7%. And if you want some assistance on your offer, Ryan, one thing you could do here, and you could just see how this area has turned from a seller's market to a buyer's market. You could actually download a market report here for this zip code. And I'm going to show you in a second what this looks like. You can download a market report for this zip code and show it to the seller, show it to the listing agent, just for additional, support for your offer. Why your offer is below asking price. Here you could see we have that forecast for the zip code minus 6%, and the report breaks out all the reasons why that forecast is that way. So that's a great feature on Reventure app if you guys want to check it out to get some additional support for your offer strategy. But let's take a look at some other areas, right? Because we have a lot of price cuts. We have a lot of downward pressure here. If we just zoom out all across the South in the US, right? Negative forecasts here in Tennessee and Florida and Texas, Colorado. Really, Reventure now is a negative forecast probably in about 50 to 60% of the US over the next 12 months. And these forecasts are getting really, really negative, right? So let's just look actually at more Zillow listings. Like, let's take a listing in Denver. I know some of you are in Denver, some of you in Utah, some of you in Idaho. I have a lot of people in the mountain states. A lot of these markets are behaving similarly right now. Let's just look at a suburb of Denver like Aurora, just to the east. Let's look at what's on the market. You can see here we got a price cut. This is a cute little house, 3-bed, 2-bath. 1,400 square feet for $465,000. Folks, again, I want you to remember that comparison to Rochester. This house, a house like this in Rochester was $240,000. In Denver, it's $465,000. They just cut the price 20 grand. So was that price cut meaningful? Was that price cut meaningful? Well, somehow it sold for $225 and then was listed for $465. So I don't really know what the seller's doing here. Did they flip it? Was this a flip? It looks like it might have been a flip. So this was a flip. So they bought it for $225 and then flipped it, everyone. So this is a flip. I think they did maybe a decent job on the renovations. I'm not a contractor, but it looks like a livable house. You guys can let me know what you think. $332 a foot, though. That's really expensive. $3,000 a month for your monthly payment. What's going on in this zip code in Aurora, Colorado? And if you're in an area like this, what would you do in terms of offering on this house? Should you buy this house? Maybe offer below ask. Let's look at the zip code 80011. 80011. Aurora, Colorado. How does the data look in 8011? Oh my gosh. Oh my gosh. Folks, this is one of the biggest downward forecasts I've seen here on Reventure app. Minus 11% is our forecast for this zip code. I want to show you this, everyone. Our scores for DOM and inventory are literally zero. We have a 0 score for DOM and inventory. Let me show you all what that looks like, actually. It's kind of an inverse. So the score is the inverse of how much inventory there is. So there's 124 homes on the market in the zip code in Aurora, Colorado, where this listing is. The long-term average is 60. So inventory is more than 2 times higher, which is why the score weighs down on the market. In addition, the DOM here, the DOM is 59. 59 days on market. So that's crazy, everyone. So the DOM score is 0. In terms of price cuts, the price cut rate is also at the highest level of all time. So if you get this trifecta, you're looking at buying a house in an area like this and you see in the zip code that we have record inventory, record price cuts, record DOM, that's your signal as a buyer. Get aggressive. Like, I would not wait. I really wouldn't wait. If I'm looking to buy and I see that score, I'm taking that score and I'm offering below list price, heavily below list price. I would offer 11% below list price on this house, which would probably be close to, like, instead of 465, you could offer maybe 415. and see what the seller says. Again, you could download the market report from Reventure app and share it with the seller. This is a market that's really starting to tank. Aurora, Colorado, to the east of Colorado. Values are already down 4% too. So this isn't just hypothetical. Values are already dropping, minus 11% forecast in the future. We got another request here in the chat, everyone. Channel members leaving requests in the chat here. If you guys want to leave more requests in the future or have your chats prioritized in the future, joining as a channel member is a good way. Edric, hi, Nick. Could you take a look at Powder Springs, Georgia? My wife and I are looking to buy within the next 6 to 12 months. Good idea, or trying to start some lowball offers? Powder Springs, Georgia, 30127. And folks, we have a lot of people in this situation. Maybe they're married, maybe they're in a serious relationship. They've been looking to buy for a while. What should you do? Should you get into the market? Well, here's the good news for you, Edric. Powder Springs is already down 3.7% in the last 12 months. Already down 3.7% in the last 12 months. So we are already seeing declining prices here. You are already starting to see more affordability. Let's actually kind of type Powder Springs, Georgia in here into the chat, bring up some listings. This is west of Atlanta, everyone. So Powder Springs, just to give you guys some view here. This is central Atlanta. You can see how bifurcated Atlanta's market is. It's crashing on the south side, still holding on the north side. On the west side, it's somewhere in between. So it's not quite a crash in Powder Springs yet, but it's a correction starting. And what do the houses out here look like? Is this a good place to buy a house for the long term? Where are prices going to go in the next year? Well, you can see there's definitely some more affordability. You have, it looks like some builder homes. This is actually not a builder home. It looks like a builder home though in the picture. Doesn't that look like a builder home in the picture, everyone? It was actually built in 1990. 3-bed, 2-bath on the market for $389,000. Huh. Folks, this is interesting. The seller on this house is trying to be smart. They just did a price increase, it looks like. It says here at least price increase, $39,000. So I don't know maybe what this seller is doing. They bought the house for $370 in 2022, and now it's listed for $389. So they're trying to make $29,000 on what they bought it for 3 years ago. Let's look at the zip code and see if that makes sense. 30127. Well, values are down 4% in the last year. So this is a zip code that's already starting to go down. So I'm already skeptical of this seller trying to make money from 2022. You can see values were flat basically for 2 years and then dropped by 4% in the last 12 months. Now let's take a look at the inventory here in Powder Springs, Georgia. Are there a lot of listings on the market? Is there a lot of competition? Well, you can see inventory is way up. 282 homes for sale. Now, that's a high level of inventory, but that's not crazy. That's not Aurora, Colorado level of inventory, but it's definitely up. In terms of DOM, let's take a look at the DOM. DOM is now 57 days. That's the highest level in the last 10 years. Again, it's not like wild though. It's not that Colorado level of inventory. And you can see, Edric, all of this is lining up to a minus 3.2% forecast in this zip code in the next 12 months. So I think we're going to continue to see the correction here play out. Minus 3.7% the last 12 months, the next 12 months, minus 3.2%. So I wouldn't expect a full-scale crash here in the next year, but expect it to continue to get cheaper. You do have 10-year high DOM. You do have 10-year high inventory. So if you do want to take the plunge now, you should be able to negotiate. And one benefit to taking the plunge now is that seasonally, this is probably the best season to buy a house. October, November, December, you're going to find the most price cuts. But I do think values here will drop a bit more over the next year. And make sure if you do offer, understand that that's going to happen potentially, and try to get a property below market if you do buy in today's market. And one thing I just wanted to also talk about, everyone, was seasonality. Seasonality on the market, because all of Reventure's data is seasonally adjusted. So when we look at inventory, we're comparing inventory to all the previous same months, right? So September inventory the previous 10 years, September days on market the previous 10 years. And that's how we come up with our forecasts are seasonally adjusted. However, there is seasonality in the housing market. We're now entering the fall and winter. And the fall and winter is kind of when the housing market goes to sleep a little bit. New listings decline, inventory will decline on a seasonal basis over the next 3 months. So you're going to see fewer homes on the market the next 3 months, but the good news is the sellers who are still on the market will be more desperate. So October, November, December into January, these are the biggest months for home values dropping just seasonally. Because if you think about it, like some of the sellers we've looked at, right? They've been on the market for 4 months, 5 months, and they still haven't sold their home. So more of these sellers are kind of getting beaten down by the market a little bit and are more willing November, December to accept a lower offer. So like the sellers that haven't pulled their home yet and are still trying to sell in December, that's telling you like they probably want to sell. They're probably pretty desperate. So I'd actually say if you are wanting to buy soon, negotiating hard in November, December, January is actually a pretty good idea if you can find the right house. If you can find the right house, right? Because the listings will be lower, but if you can find the right house, those sellers who are still listing in the winter are probably pretty desperate, and you should be able seasonally, just seasonally, to negotiate a better deal. All right, everyone, what other requests do we have here in the chat? What other requests do we have here in the chat? Firewater says he loves the channel and the content. Cleveland 44105. Is this Cleveland, Ohio or Cleveland, Tennessee? I think it's Cleveland, Ohio. So let's see. Yes, folks, we're going up to Cleveland, Ohio. What's going on in Cleveland, Ohio here? 44105. Well, in 44105, this is kind of to the southeast of downtown Cleveland. Let's actually just take a look at the demographics a bit, everyone. I want to make sure when you guys go on RevenTrap to look at data, you look at the demographics. What are the income levels? Well, whew, median household income here of $40,000. So this is just something to understand kind of the demographics of where you're buying. This is a lower income area in Cleveland with a 26% poverty rate. So what I would say about an area like this is if you buy in an area like this, there's going to be some more risk on just prices and price volatility in the future because there's a lot of investors that own in this area. There's also a lot of people who unfortunately don't have as much money and are more exposed to the economic situation who might be more forced to sell. So just understand that there's more volatility kind of in these markets with higher poverty rates, lower median household incomes. You actually see what's our long-term growth score. We actually have a roughly average long-term growth score for this zip code. In the last year, the prices are up 2% here in Newburgh Heights in Cleveland, south of Cleveland, up 2%. There's some areas further south here in Cleveland which are up 6%, like Parma. Parma, south of Cleveland's up 6% in the last 12 months. I actually know some people from Parma. Here, they're up 2%. Our 12-month forecast is roughly flat. A flat 12-month forecast. Actually, the houses here, folks, are really, really cheap. Really, really cheap here south of Cleveland. Flat forecast. I just be careful, buying. Just understand what you're getting into. Lower income, typical house is $71,000. So just understand, I bet you're probably buying as an investment. You could let me know, Firewater, if you're buying this as an investment. The cap rates are higher, so that's good. The cap rates, it's 19% cap rate. So you can get a 19% cap rate. I suspect that's probably why you might be buying in this zip code. So it's lower income, lower home prices, higher poverty, but your investment potential is much higher in terms of rent versus the home price. 19% cap rate. I mean, that's nothing to sneeze at, everyone. All right. What about some other requests? Susan is asking about Ashburn, Virginia. Now, Virginia is a really interesting market. I don't talk about it a lot on this channel, but Virginia is kind of like, really depends, like, is it DC, Virginia? And this is kind of DC, Virginia, right? So you can see this is like a DC suburb. The cap rate here is only 4.1%. So if you're an investor, you're only getting a 4.1% annual return in this zip code. Typical home value is $741,000. Obviously, this is where a lot of people live. This is a wealthier zip code too. Ashburn, Virginia, median income of $170,000, folks. So I love this. We were just doing analysis on a zip code in Cleveland with a $40,000 median household income. Now we're looking at a zip code in Virginia with $170,000 median income. What's going on here with prices? Well, in the last year in Ashburn, prices are up 1.3%. So they're just going up like a little bit. In the last month, they're actually down slightly. So they're down slightly in the last month. And then what about our 12-month forecast? Minus 1%. So Susan, I think this is an area that's starting to slow clearly. But, we're not seeing a crash here in Ashburn, Virginia. We're seeing only a 1% drop. The reason is inventory is holding a bit more steady. Days on market's holding a bit more steady. Generally, the higher income zip codes that are, west of DC, they have a bit more stability. But you could see actually the closer we get to urban DC, Woo, we have some big downward forecasts for urban DC. So, if you are looking to buy in the Washington, DC metro, make sure to go on Reventure app and check out the data for your area in DC and Virginia. We got some more requests here. How about Mormon, Utah? Benjamin Zhang wants to know about Mormon, Utah. I didn't know, is Mormon actually a city in Utah? Mormon, Utah. I'm not seeing that come up as a city. Ben, maybe you can give me a zip code or another city in Utah, but let's just like go over to Utah. What's going on in Utah's housing market, everyone? Well, prices are going up slightly year over year. They're up like 1 to 2% depending on where you go in Utah. But you can see our 12-month forecast is starting to get negative in a lot of these different markets. So to the north, especially on the border with Idaho, we have a negative forecast. And then we also have a negative forecast in Provo, negative forecast in Salt Lake City. There's a lot of inventory now hitting the market here in these areas. Inventory is just like really through the roof. I actually just want to show you guys what it's like buying a house in Salt Lake City. This is like a sneaky, really expensive area buying in Salt Lake City. This is actually the first interesting one that pops up. New construction, 3-bed, 2-bath. 1,400 square feet. It's funny, we've seen like a lot of this kind of property type in this live stream, 3-bed, 2-bath, 1,400 square feet, $500,000. Again, folks, I want you to remember Rochester was 240 grand. In Phoenix, it was about 440 grand. So this is a new construction built in 2025. I mean, pretty nice. Pretty nice new construction. Curious what that flooring is in the bathroom. But pretty nice new construction. Price of $345 a foot, that is expensive. Let's see. Well, they listed for $529. They've cut to $499 here in Salt Lake City on this new build. Do you guys think that this is a good deal? Well, let's look. 84104. 84104. Let's take a look. Let's take a look here. 84104. Well, over the last 12 months, this is basically just to the west of downtown Salt Lake City, prices are down 0.4% year over year. So flat, starting to trend down. Month over month, they're also down. Our 12-month forecast in this zip code is minus 7.3%. So we have a pretty heavy downward forecast in this zip code. It's already starting to show up, right? They've cut the price $30,000 here. It's been on the market 43 days. Only 31 saves on Zillow, which is also showing you kind of it's not a ton of interest, right? Only 31 days. I think you could come in on a house like this, everyone, show them the Reventure score, download the Reventure market report. I think you could probably offer another, 20, 30,000 below. And, you probably have a decent chance if you offered that on enough houses in this type of neighborhood to get it accepted. All right. How about Castle Rock, Colorado? Castle Rock, Colorado. Susan wants to know about Castle Rock, Colorado. We're doing a lot of Mountain West today. We're doing a lot of Mountain West. Mountain West is a really interesting market. Castle Rock, we got more suburbs of Denver here. More suburbs of Denver in Castle Rock. You could see it's down about 2% in the last year. Higher home price area. Demographics say median income is 138 to 157,000. Higher income. Prices here are dropping minus 2% year over year. And then we think the 12-month forecast here in Castle Rock is minus 9 to minus 7%. So we are seeing a big downward push. Again, that's inventory related. There's lots of inventory on the market. How about Columbus, Ohio? Columbus, Ohio. For those of you that don't know, I used to live in Columbus, Ohio. I lived there for about 8 months. In 2020, I moved there for a consulting assignment. And I lived there 8 months. The pandemic hit. All types of stuff happened when I was there. And then that was basically the birth of right before I moved to Austin and started Reventure. I like Columbus. It's kind of an underrated city. It's like, imagine Austin, but like in the Midwest, not as sunny and fewer people from California. It actually might not be anything like Austin. That actually might be a poor comparison. But it's like a university town. It's young, state capital. Prices are up 1.3% year over year in Columbus. This is definitely a market that started slowing. You can see in the last month, prices are only up 0.1%. Where's our forecast in Columbus? Ooh, we're actually tilting negative, minus 1.7% is our 12-month forecast in Columbus. So we actually have some downward pressure now showing up in the Columbus market. Columbus, like Cleveland, folks, it's another market that's very bifurcated. So Firewater did confirm he was looking in Cleveland to buy an investment property. Columbus has similar dynamics, right? So if you open up Columbus zip codes, and I would encourage you guys to do this everywhere. Like whenever you're conducting analysis, like do this analysis, like look at the incomes, right? You can see Columbus, the bluer areas have lower incomes, but they have much higher cap rates. Actually, 8%, 8.8%, 10%, actually nothing like Cleveland. Cleveland has crazy cap rates, like 15%, but higher cap rates in the lower income areas. But be careful, check that forecast because we're showing some big downward pressure in a lot of these zip codes. How about 49? I got a request from Shadow Warden 49690, Williamsburg, Michigan. I think this is the first request I've gotten in Michigan in a long time. 49, oh no, 4, sorry guys, 46960. Monterey, Indiana, not Michigan. 46960. Now where is this? This is kind of out in a rural location. I mean, this is between basically Indianapolis and Gary, Indiana. So you're looking to buy in a rural house, maybe a farm. Values here are flat year over year. They're cheap, $158,000. I mean, let's just take a look, folks. 46960. What kind of houses are out here? 46960 Zillow. What kind of houses are out here in rural Indiana? That's cute. I don't know. Is this a destination of where people would be like, is this a second home area or is this a primary home area? 50,000 price cut. This looks like kind of like a pseudo barn dominium from the outside. Is this a barn dominium? I think it is. Or a converted like garage. 3-bed, 4-bath. It's been on the market 41 days, only 14 saves. They've cut the price from 450 to 390. They've cut the price 60,000. They bought it for 285 in 2021, so they were trying to make 58%. They've now cut the price by about 14%. You can see here in this zip code 46960, we have a pretty downward forecast, minus 5.4%. So, that downward forecast is already showing up kind of on how some of these listings are already behaving. So if you're buying in this area, understand that the market shifted in your favor here in rural Indiana. You should be able to negotiate a deal. Sellers are already starting to cut the price. Share this data with them, showing where the market's heading in the future. Try to get a better deal on Reventure app. All right. How about a couple more requests, everyone? My husband and I are looking to buy soon in Northeast North Carolina, and we're wondering around the area of Gates, a word I can't pronounce, in Camden County, if it's going to get better. Lady Nightsong wants to know. Define better. Do you mean cheaper? Let's look at Northeastern North Carolina. And folks, I'm actually going here on County View now on Reventure app. By the way, at the end of this video, guys, you should definitely go on Reventure app and check out this data for yourself, www.reventure.app. You can download the Reventure mobile app on Apple and Android and access all this data at your fingertips. Upgrade to the premium plan to see our 12-month forecast in your area. But if we look here in northeastern North Carolina, Gates, here's Gates. So in Gates, values are, wow, up 12% in the last 12 months. This is kind of crazy. Camden County up 4.6%. So I see what you're saying, Lady Nightsong. This is an area that's actually still booming in terms of prices. Why are values still going up so much here? 12.9% in Gates. That's probably one of the highest growth rates of any county in the U.S. What's our 12-month forecast? Well, we think these areas are definitely going to slow in terms of their growth. We think Gates is going to go flat. Camden is going to go to 1.7%. But we don't see a crash coming here. We don't see a crash coming here. So I would say it's going to get better for you. I think the inventory has risen. Oh, the inventory is up 96% year over year in Gates, 21% in Camden. There's more supply, but it's not going to be a crash. It's going to feel like, okay, there's more listings. You can negotiate a bit, but don't expect a crash in these markets. Interestingly, the person looking in rural Indiana does beekeeping on the side and been looking to find a home with more acreage. That does look like an area that's good for that. So I think you should be able to find a deal. Scooter says, my contract with my realtor ends October 31st. The only way I can lower my price more without losing money is to sell by owner after my contract ends. Now, this is interesting, folks. We have a lot of buyers that look for advice here. What about sellers? Now, this is a seller who is close to losing money. Only way I can lower my price more without losing money is to sell by owner and not take the realtor fee. Is it too late? 74037. So folks, this is great because this is, what I talked about in the beginning, seller price cuts, like how sellers are feeling. This is Jenks, Oklahoma. Now, Jenks, Oklahoma is in Tulsa, south of Tulsa. Now, I'm curious, when did you buy, Scooter? Because we're saying values are up 2% in the last year here in this zip code. So I'm curious when you bought. We actually don't show, at least the data from Zillow does not show values dropping in this area yet across the whole market. That's not to say for specific submarkets or micro markets or houses that they haven't. But we're actually showing that this is an extremely stable zip code. The biggest drop in the last 25 years is only 3.9%, and only 2 years in the last 25 years has it actually gone down. So that's a positive. This is a more stable area. And actually, we have a plus 3.7% forecast for this zip code over the next year. Plus 3.7% forecast. So, I mean, based on the data of this area, I would say that you have time on your side. And then if you don't have to sell, maybe take your time. Maybe this is a case where you want to relist. However, one thing to note is that there's definite weakness around your neighborhood. So I don't know where you are in 74037, but if you go down to Bixby, if you go down to Glenpool, there's definitely downward pressure here. So I think this is a very much like a micro market situation. You go further south, we have negative forecasts. Here, we have more stable forecasts. I don't know where you fall in this zip code, but the overall data for your zip code is saying that the values will hold. But let's just look at inventory. I just want to dive into this in more detail. So in 74037, inventory clearly is still very low. But if you go down to 74033, inventory is very, very high. So if I would say if you're more closer to Glenpool, it's more about like this is a declining market. If you're more closer to Jenks, you have time on your side. The prices might still go up. Really depends where you are in those markets. We have a request for Peoria, Illinois, Peoria, Arizona. So there's Peoria, Illinois, and then Peoria, Arizona. 85388. 85383. Peoria, Arizona. 85383. Now this is a big zip code. This is basically northwestern Phoenix metro. What is going on here in terms of this market? Values down 1.7% the last 12 months. In the last month, values are down 0.3%, so the declines are accelerating. In the next year, we forecast the values to drop 4.3%. And actually, since the middle of 2022, values here are down 6%. So this is a correcting market here in Peoria, Manicanta. This is Manicanta requested this. This is a correcting market, but it's not a crashing market. Some of these areas more to the south have heavier downward forecasts, like in Sun City. Here it's minus 4.3%. So you should be able to negotiate. Lots of inventory on the market, lots of price cuts. DOM is increasing, but don't expect that you're going to get like an amazing deal. And folks, if you are someone like who's really interested in buying a house in the next 3 months, in the next 6 months, in the next year, this is the type of analysis that you should be conducting for yourself so you can make a more educated decision on when and where to buy. Sellers are doing lots of price cuts. The DOM is increasing, but the prices are still high. And we're seeing huge differences in different cities and neighborhoods on where the projections are heading. So it's imperative that if you're looking to buy as a home buyer investor, or even looking to sell as a seller, that you access this data so you know where the market is heading in your area. And ultimately, I created a program for all of you to do that with Reventure app. I've been using Reventure app here in this video, helping the channel members with their requests. This is analysis that you should be doing for yourself as a home buyer investor. And ultimately, I would really encourage a lot of you to check out Reventure Premium. So go to www.reventure.app and sign up for Reventure Premium. It's only $49 a month, which is 0.01% of the cost of buying a $350,000 house. So ultimately, the cost of Reventure app is a huge discount, huge savings to the cost of buying a house. And we've had multiple people use Reventure app and actually save $30, $40, $50, $80,000 on their home purchases by using our forecast. We looked at a lot of different neighborhoods in this live stream with big downward forecasts where you can use that forecast to help yourself negotiate with the seller, have more confidence. Additionally, you'll be able to see the over-under valuation rates in every market on Reventure Premium. You can see that here in Phoenix for a second, how fundamentally overvalued our prices are actually undervalued. Some markets are actually undervalued. You're going to want to know that as well. You can access all of that under a ReVenture Premium plan. And the great thing about it, everyone, you sign up for ReVenture Premium, you're going to have access to Premium not only at www.reventure.app, but you're going to have access to Premium on the mobile app. So you can go on the computer and look at it on the computer more in depth, but you can also download it on your phone, on Apple and Android, and have that for ease of access. That $49 a month gets you premium access in all of these different areas. So go to reventure.app right now, download the mobile app right now, and sign up for that premium plan so you can see the price forecast in your area. You can see the overvaluation rates and